Hello traders! The topic basic engulfing is one of the most common price action in forex trading. Nevertheless, we will use engulfing as a confirmation for all Bystra setups. Therefore, we will learn how to identify proper engulfing to avoid identifying the wrong type of engulfing and minimize our risks. We will learn the basic details of engulfing as confirmation, and it is crucial to understand this topic as we will frequently use it as confirmation and entry point in our class. So let's get started. Based on dictionary.com, an engulf means is to cover up or to swallow in a whole. In forex definition of engulfing, it is a pattern which is useful for traders as a signal to anticipate the possible of a reversal in a trend. Engulfing candles are one of the most important price patterns or actions for traders because it can be used as entry signals in three strategies. So the first, it is the reversal. When an engulfing candle is formed at the end of a trend, normally it is a sign of reversal. This will be a huge opportunity for traders to enter from the beginning of a new trend, which therefore able to maximize profitability. Next, when an engulfing candle is formed at the middle of a trend, this is a sign that the trend continuation is still very strong. For example, when price is in an uptrend, price form a bullish engulfing in the middle of the trend, which then convince the traders that it is still on the strong bull side. Last but not least, it can be used as an exit strategy. When the price has reached at the end of a trend, for example a bull trend, the price will then form bearish engulfing, which indicates that the seller has entered the market. This is a sign to inform buyers that bull market will end and it will be wise to exit your buy order. There are two types of engulf. First, it is the bullish engulfing, which we will only be looking at the buy setup. And the other one, it is the bearish engulfing, which we will be only looking for sell setup. Now, please do not try to go and sell if you see a bullish engulfing is formed. Vice versa for bearish engulfing, please do not go and buy if you see a bearish engulfing and you try to go and buy it. This will go against the trend, and definitely the chances of you making loss is very high. Now, bullish engulfing. Let's look at the candlestick. So this is the type of bullish engulfing that we want to look at it. This is the bearish candle. This is the bullish candle. As you can see, these bullish candles, it eats up the whole red candles, including the wicks from the bottom to the top. And the next good bullish engulf is this type, even though the red has a longer wick than the bull, but it's fine because price could be rejected from the support and continue in a uptrend movement. Most important is that this bull engulf has to complete eaten or engulf this whole red candle including the wick. This will be a very strong upward trend. Okay, it indicates that the rejection from the support is very strong. Not only that, it also broke this structure, which is what we call the higher high. So it is very important that we understand the structure in the bullish engulfing. Now this is a high risk bullish engulf that we do not want to engage with. The bull of this candle, it doesn't engulf the wick of this red candle. However, it did engulf the red candle's body, but for us, it's still considered a high risk setup. Most important is that we want this candle body to be closed above the wick. The reason why is because we want the body to clearly break this structure here, which is the previous resistance of this red bearish candle. Now, this is not considered as a bullish engulf, where the red candle and with the wick is much bigger than this bullish candle. So this does not include or doesn't count as a good engulf for bullish. So high risk, we will try not to take it. And this one, no, no, no. It's definitely a no-no. Now let's look at the bearish engulfing. Same as like the bullish engulfing. As we can see here, this bearish engulfing candle, it engulfed the whole bullish candle, including the shadow or the wick. See, from the top to the bottom, this is what we call a very good. For me, it's considered as a perfect engulf. And the next type of engulf that we want to look at is this. It doesn't matter that the top wick here is longer than this bearish engulf, because price could be rejected from the resistance, a strong resistance, and continue on a downward trend. We can look at this body of this bearish engulf has engulfed the whole bullish candle, including the wick. So this is a very good bearish engulfing. Now let's look at this high risk bearish engulf. As we can see that this bearish candle, it only engulfed the body of this bullish. However, it doesn't engulf the shadow or the wick. It could be that there's a strong buyer rejection from the bottom. Therefore, this is still considered as a high risk bearish engulfing. Now, this is definitely not a bearish engulf because the bearish candle unable to engulf this whole body, including the wick. Not even the wick of this bearish engulfing able to break this structure here. So it hasn't broke the lower low structure. So this is definitely not a bearish engulfing. We would definitely want to avoid this, and definitely doesn't take this as a bearish engulfing. Now let's try to do some exercise. Are you able to identify the good bullish engulfing, the high risk bullish engulfing, and the no bullish engulfing? Now I'm going to give you a few seconds to identify it. Let's see whether you get it correct. Okay, the first one. Yes. As you can see, this is the result. The most left and the most right is definitely not the engulf that we want to choose. It's only both in the center. Did you get it right? If you do, I would like to say congratulations. If you don't, it's okay. Let's just keep on practicing, keep on trying until you're able to familiarize with this good bullish engulfing. Same goes with bearish engulfing. So here out of 4, let's try this exercise again. Are you able to identify the two good bearish engulfing? One is a high risk and one is a no-no. Are you ready? Let's look at the answer now. Yes, both centers are the high risk and it is a no-no bearish engulfing, whereas the most left and the most right are the good bearish engulfing. Did you get it right this time? If you do, I would like to say congratulations to you. Yes, you made it. But if you don't again, it's okay. Just keep on practice until we get it right. Let's look at the example in the MT4 chart. Here, we can see that there are some of the bullish and bearish engulfing. Now, are you able to identify which are the good bullish or bearish engulfing, which are the high risk, and which are the one that we shouldn't take it as an engulf? Are you ready? Let's look at the answer. Yes, as you can see, these blue are all the good bearish or bullish engulfing. Here we have the bearish, bullish, bearish, bearish, bullish. Here we can see there's a bearish with a continuation of a bearish engulfing. So here is the reversal and the continuation. And here's some of the bearish engulfing. And the red ones are the one that we shouldn't choose because it is considered a high risk or a no-no. This is a high risk, high risk, high risk, high risk. So make sure we're able to identify some of the bearish or bullish engulfing. For example, like this. This is the one that we shouldn't take it as an engulfing. Okay, so this is a bull, this is a bear, or this. Okay, a bearish engulfing that is not considered at all. So please be wise in how we choose our engulfing. Make sure if we choose an engulfing, we need to look at the strong Marubozu candlestick. So I think that's all we learned about engulfing. the basic of it. Hope you guys can practice more and sharpen your eyes, because this will be very, very good and we will use it very often in our next class. See you in the next class.